Today, I'm going to focus on one aspect of the BRRRR strategy on how to get financing on a 5+ unit multifamily property. Hey guys, it's Clay Rockwood. If you like content like this, learning how to invest in multifamily, how to structure deals, please subscribe to my channel for more content like this. Now today I was going to dive into some more advanced strategies on how to get financing from a bank on a multifamily property. Now, if you haven't watched the last video, please go back and do that because it's a simpler video on how to structure financing on a duplex, triplex, fourplex type property, even single family homes if you want to, of how to get a loan in the BRRRR strategy. This video we're going to focus on a little more advanced strategy and how to look at the numbers and how to run the numbers like a bank would to understand what kind of loan you can get and what are the terms of those loans on a multifamily property. Okay, so I've kind of written some things out here. I'm going to try to make it as simple as possible. Now, stick with me here because we're going to get into some math, but it's pretty simple, okay? I'm just going to show you how a bank would look at a property, and this is going to help you underwrite a deal or look at a deal that you may be interested in purchasing to understand what kind of loan you could get on the back end, okay? That's super important before you ever go and buy a property to understand the lending, what the loan's going to be, what the loan amount's going to be, because you want to know that before buying a property. There's a few key numbers you're going to want to look at or have before you even start underwriting this, okay? So the first is gonna be your gross monthly rent. So let's assume we have a property, right, that's making $10,000 a month. That's your gross rent. That's what your total rental income is coming in from the tenants, okay? Gross rents, then you're going to know your operating expenses. Now typically we use a ratio of about 30 to 40% in operating expenses. That includes everything from property management fee, repairs, maintenance, anything you can imagine with the property. Sometimes taxes, insurance, things like that. Anything that's going to cost you to run and maintain that property, right? So you have to factor in things like, if furnaces go out, if roofs go out, utilities, things like that. So we typically just jumble those into one big fee, right? So on average, it's 30, maybe 35%. If it's a larger property, that can be higher, right? But to make math simple, we typically underwrite it on a 30% expense ratio. So, for example, now we'll get into the example in a second. What you do is you take your gross rents, you minus your operating expenses, which will then give you your net operating income or your NOI. That's a very common number that you're going to look at when looking at multifamily, okay, is the NOI, the net operating income. What that basically means, again, in our example, if we're making $10,000 a month in rent, we're going to take out 30% expenses, which is $3,000 per month. That gives us our NOI of $7,000. Simple math. You're taking $10,000 minus $3,000, it gives you $7,000. That's your net operating income in this scenario. So that says after all my expenses on this property every month, I should have about $7,000 left over, okay? Now what do you do? Now that we have that number, that should be pretty simple and straightforward to get to that number. Whether this is a property you already own or you're looking to purchase a new property, you can easily obtain that information. You just have to know what the rents are and what the typical expenses are, okay? Now once you have that, this is how a bank is going to look at this. So if I were going to take this deal to a bank and say, hey, Mr. Bank, here's a property, I want to get a loan on this. I'm currently collecting a net operating income of $7,000 a month. So this is exactly how the bank is going to underwrite this deal to determine what loan amount they're going to lend you, okay? So that's what we're trying to determine here is what the loan amount they're willing to lend us, the max loan amount, okay? Without knowing anything else about the property, we can determine what the bank will lend us, which is really cool. So the bank is going to use this phrase here, the DSCR ratio, the debt service coverage ratio. You don't have to memorize that, doesn't really matter. This is just a calculation the bank uses, okay? And they typically underwrite this with a 1.25 debt service coverage ratio. Again, that may sound like Greek to you. You don't have to memorize that or learn it, okay? Basically, that's just a calculation they use. So what they do is they take your net operating income, your $7,000, right? Then they divide it by that 1.25 number, okay? And this will spit you out another number. So in this example, if I take the 7,000 divided by 1.25 gives me $5,600. Now what that number means, that is the max monthly payment that the bank is going to allow you to have on that property. That is your max monthly mortgage payment amount. Okay? So the bank is saying, hey, we'll lend you a loan amount that equals a $5,600 a month payment. Okay, well that's all fine and dandy, but we still haven't determined what the loan amount is. What is the bank going to lend me? I know what the monthly payment could be, but what is the loan amount? In order to determine that, you're going to have to go, what I would recommend is you're going to have to plug this into a loan calculator. You can literally do a Google of mortgage calculator, loan calculator, whatever you want to use. There's a million of them out there, and it takes 2 seconds to find these online. But basically, I'd plug this in to Google and look into a loan calculator. So a couple things you're going to want to just make sure are in there. On a commercial loan like this, on a multifamily loan, they're going to have a 25 or a 30-year loan. That's kind of standard. I would just base it off a 30-year loan, which is standard. Some banks only do 25-year loans, but you can play with those numbers in the mortgage calculator. And then you're going to put in the current interest rate, whatever that is at the time that you're running this. And again, if you don't know what the current interest rate is, talk to a bank. Just call up any lender, mortgage broker, bank, credit union. Just ask them, hey, what is the going interest rate for a multifamily property, right? And they'll give you a range. Maybe it's 3.5, maybe it's 4, maybe it's 5%. For us, we typically use about a 4% interest rate. It's kind of a safe number currently, right? But again, that's going to change over time depending on the market and depending on the current interest rate. But you plug in the term of the loan, 30-year loan, you plug in the interest rate of 4%, and then you want to start playing around with the loan amount, the amount which will then equal the payment of $5,600. So for example, I was doing this calculation, I put in a loan amount of $800,000, for example. If I were to borrow $800,000 on a 30-year loan at a 4% interest rate, what would my total monthly payment be? And it gave me a number of like, 4,000 something. So that means, I can actually borrow more than $800,000. I'm trying to get that monthly payment up to the $5,600. So, and you just play around with this, putting different amounts in that loan calculator. Eventually, I put in $1.2 million. So if I were to borrow $1.2 million, it spit me out a number pretty close to this of $5,600. So theoretically, what this means is that a bank, if my property is truly producing $7,000 a month in net operating income, theoretically, this bank will lend me up to $1.2 million, okay? So that's an easy, honestly, I say easy, it's a simple way, right? Once you've kind of done it a few times, it becomes very simple and easy to run these numbers. But a simple way to just take your gross rents and figure out what the bank is gonna lend you. Now, obviously, you can see how this works. If I can get my gross rents up higher, if I can increase rents to say $12,000 or $15,000 a month, what's going to happen to this number? This number is also going to go up, right? So that's the beauty of multifamily real estate is if anything you can do to raise those rents, whether that's doing improvements to the property, whether that's just raising rents even $25, $50 a month, that dramatically affects how much money the bank is going to lend you. And that number will go up simultaneously with your gross rents, okay? So this is the beauty and the power of multifamily investing. And you can imagine how this works on a large scale. If you had a 2 or 3, 500 unit apartment complex, any little change in those gross rents will dramatically affect the bank loan that you get, okay? So this is a way that we do on a lot of our properties to BRRRR out, to basically refinance and pull all of our money back out from the bank. Now guys, if you're looking at this and your head is about to explode because you don't understand one thing I just said, that's fine. Don't worry about it, okay? You don't have to become an expert at this. I'm just showing you this process so you can start understanding it. But honestly, you don't have to learn this in depth, okay? The best way to do these calculations and figure this out is to go talk to a mortgage broker, right? Get a good relationship with a mortgage broker or a banker, someone that does the mortgages or loans, and just ask them to help you with this, right? And they can internally run these numbers for you. And all you have to know are these numbers. What are your rents? What are your typical operating expenses? And they'll be able to help you out with the rest, okay? So don't let this stop you or impede you, okay? You don't have to become an expert at all these things. You just have to know the basics, and understand it, and get good relationships with mortgage brokers, and they'll help you do the rest. Now, if you guys want to see real life examples of how we implement this exact strategy on our own deals, we've created a new series called the Multifamily Deep Dive. So watch those videos. We're constantly putting out more content of actual deals that we're doing, actual number breakdown, so you can see a real life example of how this works in the real world, okay? Now remember, if it's not now, then when? And if not you, then who?